Hi, I'm Connor from Hive, and I'm here today to talk you through the 5 most frequently asked questions I've been receiving this January tax season. Question number 1, what is the impact of me deferring my July 2020 payment on account? You might be surprised by the January payment that your accountant provides to you this year. It might be much higher than you were expecting, it might be higher than normal. The number one reason for this that I've been seeing, other than people's profits having increased in the year to March 20, is that people haven't obviously made their July payments on account. This is as a result of the government saying to people that you could automatically defer your payment, not suffer any late payment penalties or interest on the July 20 payment that was due, and instead it will get wrapped up in your end of January 2021 payment to cover off the rest of the tax that you have due for the year. If you're a client of Hive, then when we send you your covering letter with your tax return, if you've already received it or you're due to receive it in the next couple of weeks, then we make it clear in the letter that the payment that we advise you to make at the end of January 2021 covers off any impact of any deferred payments on account that you haven't yet made. This means that if you are able to make the payment that we suggest to you at the end of January, your tax account for the year will be fully caught up and there will be nothing else outstanding. Question number 2, can I reduce my payments on account into the next tax year? Staying on the topic of payments on account, there is actually an election that you can make in your tax return when you submit it to HMRC to elect to reduce your payments on account into the following tax year. Your payments on account are always 50% of your current year tax bill. So if you're drawing your tax return up to the 5th of April 2020, which obviously covers your income from April 2019 to April 2020, it's likely that your income for that year is much higher than your income for the current year, given the pandemic that's happened. If you believe that your income in the 2021 tax year is going to be considerably lower than your profits were for the 1920 tax year that's just gone, then you can actually make an election to reduce the amount that you have to pay towards next year, rather than basing it off 50% of the year's profits that have just gone. Surprisingly, this isn't a question that I get asked actually by clients very often, but particularly for this year, it's one thing that we've been making sure for all of our clients of Hive that we look into when we prepare your tax return. So you may have had a question from me or from someone else in the team already when we've been preparing your tax return to ask what your income has looked like for this current year. The reason we do this, as I said, is if your income for the 2021 tax year is looking considerably lower than the year before, then we can help or we can make an election to reduce your payments on account going forward. The benefits of this can number in the thousands cash flow wise. Your payments on account could easily exceed maybe, say, £10,000 based on last year's profits. Whereas if your profits this year are looking as if they're going to be halved, then we can reduce your payments on account by upwards of thousands of pounds, which will come into particular benefit if you have chosen to defer your July 2020 payment on account, because it will lessen how much you have to pay at the end of January this year. Like I said, you may have already had an email from me or from someone else in the team if you've already sent your records in to ask what your current year income is looking like. If you haven't sent your records in to us yet and you're planning on doing so in the next week or so, then please do make a note to include what your income for the next tax year is looking like, and we can take it from there and see if there's anything we can do to help reduce your payments going forward. Question number 3, how can I pay my tax bill? If you're a client of Hive, then in the cover letter that you get with your tax return, which details how much you actually have to pay, on the second page, we always include details of how you can make payment for your tax that's coming up at the end of January. If you need a quick rundown though, or you don't have your letter to hand, these are the ways that you can make your payment the end of January this year. You can pay by faster payment online or by telephone. You can pay by debit or credit card online, by bank or building society in person. To do this, you will need your HMRC payslip, which they send in the post to you, as well as a reminder that your payment is coming up. You can pay by CHAPS, you can pay by BACS, you can pay by direct debit, or you can pay by cheque if you still have a chequebook, which I don't. The reference that you'll need when you make any payment online to HMRC is your 10-digit UTR number, which again can be found on your tax return that we send to you, followed by the letter K. You will also need HMRC's bank details, which you can find online. There are two accounts that you can pay to, the Cumbernauld account and the Shipley account. The correct bank account that you'll need to pay to is explained on the letter that HMRC send to you with the pay slip. If you haven't received this letter or you're not sure where it is and you don't know which bank account you need to pay to, then please pay into the Cumbernauld account with the reference number that I just said, and that will make its way to your personal tax account. Question number 4, what if I can't make my January tax payment? So if you're not able to make your tax payment this January, which is a question I have been asked a few times this year, which is understandable given the current situation that we are in, then there is a method called a time to pay arrangement, which HMRC have to help people out who can't make their January tax bill. The time to pay arrangement has been around for quite a while now. It was always quite a difficult thing to get into though, and HMRC asked a load of personal questions to make sure that you had explored every other kind of financing option you can before they would agree to any kind of payment plan with the taxpayer. Again, given everything that has happened this year, HMRC have made the time to pay system easier, and you can now apply for a time to pay arrangement online without having to talk to anyone at HMRC directly. If you did want to set up one of these online arrangements, then your tax bill at the end of January needs to be under £30,000 to be able to do this automatically. The new online time to pay arrangements that HMRC have introduced defer the January payment that you have to make over a period from 12 months from when you apply or from the end of January. The benefit of arranging this, obviously with just excluding any cash flow benefits that it would have for you, is that setting in place a time to pay arrangement cancels out any late payment penalties that may happen if you can't meet your full tax bill in time. So if you are struggling to meet your tax bill and you don't know when you may be able to make it up in full, then it's definitely worth getting in touch with HMRC and seeing what arrangements they have in place. If your tax bill is over £30,000 at the end of January, you won't be able to make the simplified application, but you can still call HMRC on their helplines and speak to an advisor who will be able to set up a payment plan for you. It's worth noting that the time to pay arrangements do still incur interest while they're in play, even though you don't get any late payment penalties. And if you set up a time to pay arrangement now, it may impact HMRC's decision on any future time to pay arrangements, depending on if you make the payments on time. Question number 5, when is the furlough job retention bonus payable? And this is a question that I've been getting more and more recently. I did receive a few questions on it back when the incentive was first announced. I've been getting more questions about it recently, as the payment originally was intended to come in at the end of January, being a £1,000 payment to employers who have furloughed staff in the past but have managed to retain their jobs up until the end of January. Unfortunately, this bonus has now been scrapped by the government, as the furlough scheme has been extended in its current state until the end of April. The Chancellor has announced that there will be a retention incentive for employers for keeping furloughed individuals on. However, we don't really have any more information about that incentive past this point. There's no details on what the incentive will be or when it's expected to come in. But I think it's probably safe to assume that as long as the furlough scheme exists in its current state, paying 80% of employees' wages, that there won't be any incentives coming in just yet. Until the furlough scheme starts to wind down, that's probably when you're most likely to see more details of the incentive announced and how to go about claiming it. So those are just 5 of the main questions that I've been receiving this January so far. Of course, the tax month isn't over yet, so there's still plenty of work to do and lots of more questions, I'm sure, that need to be answered. As I said, if you're a client of Hive and you haven't got your information into us yet, then please do forward it along as soon as you can. And if you had any questions about anything that I've raised in this video or anything else, then do feel free to get in touch and someone from the team would be happy to help.